Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Friday, the 22nd of September 2023. We'll be breaking down chart and show the exact zones where price will close above potential buys or close below for potential sells as well. So looking at the daily candle for Thursday, the daily has been extremely bearish, breaking below this weak daily bearish candle that was formed on Wednesday with a rejection to the upside. And I'd say this was actually a really good confirmation for further sells to the downside, knowing the daily candle. Obviously, this daily candle broke above this daily resistance, broke above the Tuesday daily high, but failed to close bullish above the daily resistance. Instead, it rejected the upside, closed below this daily resistance, and closed weak bearish. So the probability for price to continue bearish was probably once price broke below this low for a continuation to the downside. When we have these two clean candles to mirror on the left on a daily time frame. When looking on a weekly, the weekly is also retracing and rejecting this previous weekly resistance. And the monthly is retracing and trading just within this previous monthly support formed. That was formed on in July 2023. Now, and to be honest, early on the month, on the one of the daily breakdowns we've done, we've explained how, as this weekly candle closed bullish and failed to retest this weekly resistance, how there was a probability for this weekly candle, which obviously that was what happened, the weekly candle to form a resistance, and then for price to pull back to retest this weekly support. Because as price retests this weekly support, that means this new monthly candle will be filling the previous monthly low, knowing the monthly closed bearish, forming monthly resistance. So now to break down the chart and dropping down to the daily time frame. Obviously the daily is closing bearish, but now the daily is retracing. And what's interesting here is the daily obviously made the low around 1913. Let's say 1914 for example. But that is price rejecting this area, and price is retracing to trade just within the 1920 area, which is the monthly support. So that means like that seems to be this seems to be a strong monthly support. And now to break down the chart and drop it down to the 4-hour time frame, what we can see here is we have the most recent 4-hour support formed around 1917 500. The most recent 4-hour resistance is all the way up to 1942 700. Dropping down to the hourly time frame, we have this range now on the hourly. We can adjust the level of support around 1916 200. We have this hourly resistance on the hourly time frame around 1921 600, but this is a small range. So in that case, we're going to adjust this level to 1925 200. Dropping down to the 5-minute time frame, we have the same level of support and resistance, and on the 15-minute time frame, we do have this 50-minute support below the line, but on the hourly that looks decent, I'd say. And now to identify the no trades, and I'd say based on the hourly, I mean, we do have, maybe what we could do, we could look for potential buys above 1923, above this previous 1-hour support. Now, when we are allowing enough range for price to consolidate, because we can't leave too much of a big range, otherwise this is going to be a big no trade zone. So I'd say potential buys could be above 1923 as price break and close above this previous 1-hour support. For potential sells could be below 1916 200 as price break and close below this previous 1-hour support. And this is going to be the no trade zone. And now to look for potential buys. So now looking at the daily and the way the daily is closing, I mean the daily is retracing. So what we're going to do here is, the first thing we're going to mark up is this previous daily resistance formed around 1934 100. Zooming in and dropping down to the 4-hour time frame, we have this previous 4-hour support formed around 1926. Actually, this is decent, around 1928 600. Dropping down to the hourly time frame, we have an hourly resistance within that level on the 5-minute time frame. I mean, once we drop down to those lower time frame, it does look a little bit inconsistent because you do have this 1-hour resistance, for example, but then on the 4-hour time frame, it looks clean. I would say I'd probably have the first target for buys at 1928 600, targeting this previous 4-hour support, and obviously you can manage your risk accordingly once you're in the trade within this range. The second target for buys, we could have it at this previous daily resistance formed around 1934 500. targeting the retest of this daily resistance. And now to look for potential sells and going back to the daily. So the daily, what we can see here is we have this daily support formed around 1909-200. Zooming in, and let's actually have a look on weekly, monthly. Okay, dropping down to the 4-hour time frame, and this is where it gets really messy, because this is a messy range on the 4-hour time frame, and we have this 4-hour forming a low in here and then retracing from that low. When you put a line to where this low is, this matches with this previous 4-hour resistance. So what we're going to do here is probably the first target for sales could be 1913, I'd say, targeting this previous 4-hour resistance, because when you drop down to the hourly, we'd still have clean traffic on the left, and now previous 4-hour resistance matches with this previous 1-hour resistance. And the second target for sales, we could probably have this previous daily support formed around 1909-200, which on the 4-hour time frame, let's see what that looks on the 4-hour. On the 4-hour, again, this is a messy range, so ideally is to stick to the high time frame. So I'd say the second target for sales could potentially be 1909-200, targeting the daily support formed on the 15th of September 2023.
Dominion Markets, your trading sanctuary.